Tesla's Q1 earnings are just days away. And today, we're going to break down everything you need to know to make an informed investment decision. We're at a critical inflection point for the stock, with the April 22nd announcement potentially determining Tesla's direction for the remainder of the year. Let me tell you exactly what we'll cover in this video that no other analysis is talking about. The stock has declined over 40% year to date, but has recently shown signs of stabilization. We'll identify the 3 critical metrics that will determine post-earnings movement and analyze fundamentals, technicals, and analyst expectations. The stock has taken a massive hit, but is this an opportunity or a warning sign? Tesla currently trades at $241.37, down 50.6% from its all-time high of $488.54 reached last December. The stock has established a 52-week range between $138.80 and $488.54. Notably, we've seen a 15.21% recovery from the April 8th low, suggesting possible momentum heading into earnings. Looking at Tesla's year-to-date performance, there's one critical factor most investors are missing. Tesla has significantly underperformed the broader market in 2025. While major indexes have gained, Tesla has declined 40.23%. With a beta of 2.42, Tesla typically moves more than twice as much as the market in either direction. This high volatility creates both risk and opportunity around earnings. 4 key numbers will determine if Tesla rallies or crashes. Let me show you what to watch. Analysts expect $25.6 billion revenue, up 20.2% year over year. EPS target, 0.42, recently cut by 9.34%. But here's the critical metric. Automotive margin must hit 22% to restore confidence. Energy growth of 25% plus would be a bonus. Tesla's growth story has stalled. The next quarterly report could change everything. Revenue has plateaued for 4 straight quarters, around $25 billion. Q1's expected 20.2% year-over-year growth to $25.6 billion would break this trend and reignite the growth narrative. This next chart is why Tesla's stock collapsed and why it could bounce back. Pay attention to this number. Automotive gross margin has crashed from 28% peak to just 17.9% in Q4. The target is 22% for Q1. If Tesla hits this, it validates Musk's strategy of sacrificing short-term profits for market share. A miss could send the stock tumbling. Wall Street keeps slashing Tesla's profit estimates. Here's what that means for you. Q1 EPS estimate cut from 0.56 to 0.42, a 25% reduction. Tesla's missed earnings in 3 of the last 4 quarters. The bar is now lower, potentially setting up for a positive surprise. Despite all the drama, Tesla has a fortress balance sheet. Here's why that matters. $36.56 billion in cash versus just $7.88 billion in debt. Debt-to-equity ratio of only 0.108. This financial flexibility gives Tesla runway to weather challenges and fund future growth. Tesla's still generating massive cash, but for how long? Operating cash flow, $4.81 billion in Q4, free cash flow, $2.03 billion. Despite margin pressure, Tesla continues generating substantial cash while investing $2.78 billion in future growth. Everyone focuses on cars, but Tesla's energy business is quietly becoming a profit machine. Energy revenue hit $10.09 billion TTM, up 29.2% year over year. This higher margin business now represents 10.3% of total revenue and could provide a crucial growth offset to automotive challenges. Tesla's automotive mix is changing. Here's what investors need to know. Vehicle sales dominate at $72.48 billion TTM. Model 3Y represents 87% of sales. Regulatory credits contribute $2.76 billion in high-margin revenue, crucial for overall profitability. 4 major developments could impact earnings. Let me highlight the most important one. Key updates. Tata Semiconductor Partnership expands India reach. Manufacturing strategy shifted away from risky gigacasting, Saudi Arabia market entry, and a cheaper Cybertruck variant. Watch for progress updates on the earnings call. Tesla's chart pattern reveals a potentially explosive setup. Here's what traders are watching. Key resistance at 244.34 and psychological $250 level, support at $237.68 and critical $138.80, which coincidentally marks both the 52-week low anniversary and earnings date. Is Tesla forming a bottom? This technical pattern could signal a major reversal. 15.21% recovery from April 8th low suggests bottoming pattern. Earnings coincide with 52-week low anniversary, adding psychological significance. Break above $250 would confirm reversal. Tesla's valuation remains sky high, but is it justified? PE ratio 118.32 versus industry average of 13.53. Forward PE 71.47. Price to sales 8.64. These premium multiples reflect high growth expectations despite recent challenges. Tesla trades at nearly 9 times its industry peers. That's insane. Unless Tesla's PE is 8.74x higher than industry average. This premium has compressed from previous peaks, reflecting lowered investor confidence, but still requires exceptional growth to justify. Wall Street can't agree on Tesla. Here's why that matters for your investment. 38 analysts, 16 buys, 11 holds, 11 sells, almost perfectly split. This polarized sentiment reflects deep uncertainty about Tesla's future direction. Price targets range from $130 to $360. Here's what this massive spread tells us. Wells Fargo at $130 implies 46% downside. 24/7 Wall Street at $360 suggests 49% upside. Consensus at 305.93 offers 26.7% potential gain. This wide dispersion signals extreme uncertainty. Tesla's recent earnings track record is concerning. Here's what the pattern reveals. Missed earnings in 3 of last 4 quarters. Q4 miss, 4.83%. Q2 miss, 16.15%. Only Q3 beat expectations by 20.49%. This inconsistency makes Q1 predictions challenging. 2025 delivery targets vary wildly. Tesla's guidance will be crucial. Analysts project 1.95 M to 2.08 M units for 2025. Management shifted from specific targets to return to growth language. Q2 guidance will be critical for sentiment. The EV race is intensifying. Can Tesla maintain its lead? Tesla holds 18.7% global EV market share, but BYD is gaining with 15.5% share. Tesla needs affordable models to maintain leadership as competition intensifies at all price points. Tesla's ESG rating just took a hit. This could impact institutional investment. MSCI downgraded Tesla from A to BBB. Strong environmental score 9.2, offset by poor social 1.4 and governance 3.0 metrics. This affects ESG-focused fund flows. Production challenges threaten Tesla's growth. Here's what could go wrong. Key risks: Cybertruck ramp issues, supply chain disruptions, increasing competition affecting capacity utilization, and trade tensions impacting global operations. May 2024 strategy shift away from gigacasting signals, manufacturing innovation challenges. Demand is Tesla's biggest near-term threat. The price margin dilemma could crush profits. Continued price cuts compress margins while weakening consumer sentiment. Interest rates affect financing, and EV adoption may be plateauing without affordable models. This creates a dangerous balancing act. Tesla's premium valuation is a ticking time bomb. Here's why. PE ratio of 118 versus industry 13.5 requires sustained growth. High growth stocks vulnerable to Fed policy shifts. Valuation assumes success in new models and robo-taxi development. Rising rates and trade tensions create a perfect storm for Tesla. Auto financing rates rising from 4.75% to 5.3% impact affordability. Tariffs affect battery materials, 7.2% impact, and electronics, 5.8%. China weakness and escalating tensions add pressure. Big money is making moves in Tesla. Here's what smart investors are doing. Institutions own 43.8% of Tesla. Short interest at 2.38%, 76.46 million shares, could amplify positive earnings movement. Index funds dominate holdings due to S&P 500 inclusion, while active managers show mixed sentiment. Four numbers will determine Tesla's fate after earnings. Here's your cheat sheet. Watch 4, auto margin above 22%, revenue above 26B, EPS beating 0.42, and forward guidance on deliveries. These metrics will drive post-earnings movement. In a best-case scenario, Tesla could rally 15%. Here's what needs to happen. Margins recover above 23%, revenue exceeds 26.5B, positive Model 2 timeline, robo-taxi progress updates. This could trigger 10 to 15% rally with short covering amplifying gains. If these numbers disappoint, Tesla could crash 12%. Here's the nightmare scenario. Margins stay below 20%, revenue under 25B, further product delays announced. This could trigger 8 to 12% decline as investors question the growth narrative. The most likely outcome? Mixed signals and modest movement. Margins improve to 21 to 22%. Revenue meets expectations. Mixed forward guidance. Expect 3 to 5% movement as market digests conflicting signals about Tesla's trajectory. For conservative investors, patience is key. Here's how to play Tesla safely. Wait for post-earnings clarity. Enter only on significant pullbacks below $200. Maintain strict position sizing at 3 to 5% of portfolio. Use stop losses given Tesla's high volatility. Aggressive traders can capitalize on Tesla's volatility. Here's how. Consider pre-earnings positioning using option strategies to limit downside. Use technical levels like 237.68 support for entries. Prepare for 5 to 10% swings in either direction. Beyond Q1, Tesla's future depends on 4 critical factors. Let me break them down. Long-term success requires AI and autonomy leadership, energy business expansion, affordable model introduction, and margin recovery. The next 6-12 months will validate this thesis. Our final verdict on Tesla before earnings: high risk, high reward. Our rating: hold with high volatility warning. Auto margin is the key determinant. Watch for product roadmap commentary. Prepare for 5 to 10% swing post-earnings. Risk reward currently balanced but highly volatile. Tesla's at a make or break moment. Q1 earnings will set the tone for the rest of 2025. Are you ready? Q1 results will either confirm recovery or signal prolonged challenges. Success requires innovation leadership, margin recovery, and new mass market models. The next 6-12 months are critical for Tesla's trajectory. I hope you enjoyed this deep dive into Tesla's upcoming earnings and found it helpful for your investment decisions. If you did, please leave a comment below with your thoughts on where Tesla's headed. Don't forget to subscribe for more market analysis and stock breakdowns. I'll see you in the next video, and make sure to check the comments for any follow-up questions. Thanks for watching.